Suppose that the central government of Arctica holds equity, 500,000 publicly traded shares in the Arctica National Bank as a minority shareholder in this private bank. The stock market value for each share was 3 cubes 25 domestic currency per share as of January 1, 2019. So the opening value of these shares was 1,625,000 cubes. Now suppose that the government decided to sell 200,000 of its shares on June 30, 2019, and the market price at that time was 3 cubes per share, so it received 600,000 cubes in cash. Further suppose that the value of these shares quoted on the market was worth 3 cubes 65 at the end of the year, December 31st, 2019, the last trading day of the year. So the closing balance is 1,095,000 cubes. Let's assume that other volume changes in assets are equal to 0. How much are the holding gains and losses on this equity? Well, the answer can be calculated using the formula holding gains and losses equal the closing balance minus the opening balance minus transactions minus other volume changes in assets. 1,095,000 minus 1,625,000 minus a negative 600,000 minus 0 equals 70,000. In other words, a holding gain of 70,000 cubes is recorded. While the transaction reduced the value of equity holding by government by 600,000 cubes, the increase in the market price at the end of the reference period resulted in a holding gain of 70,000 cubes. Note that holding gains and losses can only be determined at the end of the period because the closing balance is needed. Also, note that no holding gains and losses are recorded for instruments using nominal values as proxies for market value, such as currency and deposits, domestic currency denominated loans, and non-life insurance and standardized guarantee schemes, and other accounts receivable payable. The exceptions to this statement are certain insurance and standardized guarantee schemes where special and specific information is needed, and foreign currency denominated instruments where the changes in the exchange rate give rise to holding gains and losses.